Are you thinking about getting into real estate investing, but you're overwhelmed on how to get started? Well, in this video, I'm going to teach you the basics to lead you down the path of financial freedom. Let's check it out. Hey everybody, welcome back to my channel, BrettBRealEstate. I, of course, am Brett Baholi, your Okanagan real estate professional. In this video, we're going to explore the best ways to get involved in Canadian real estate, discuss the pros and cons, and provide some alternatives for those looking to get involved without the heavy financial commitment. So let's get started. In Canada, real estate has always been a hot commodity. Despite being the world's second largest country by total area, the limited supply of real estate means the asset is always high in demand. Real estate investors have always benefited from the steady increase in value of properties across the real estate market over the last several decades, and this is magnified in this country's largest cities, including Toronto, Vancouver, and Montreal, which account for 33% of Canada's total population, over 39 million people. So what are the best ways to get involved in real estate in Canada in 2023? You might be surprised to find out there's actually quite a few ways to gain exposure to real estate. Rising interest rates have cooled the market to start the year, but the potential for high capital appreciation and steady income flow is definitely worth exploring. But first, let's understand what real estate investing is all about. Real estate investing is a broader industry than most people think. Many people will think that buying and selling real estate is the only way to get involved in investing. These days, there are plenty of other ways to get involved in the real estate market. As with most other assets, the value of the property is determined by the real estate market, and prices are primarily affected by the law of supply and demand. This also means that savvy real estate investors can spot an opportunity to buy low and sell high. Real estate investing can be a lucrative way to diversify your portfolio, but it also requires significant startup capital and the ability to pay off a mortgage. While these things can pose barrier to entry, real estate investing is one of the surest ways to grow wealth over time. Now let's dive into the 6 best ways to invest in real estate. Number 1, buying a house. One of the simplest ways for most people to invest in real estate is buying a house. Now you might think buying a house isn't really a form of investing, but it absolutely is. The main reason you're buying a house is that the presumption that it will increase in value over time. So you get the benefit of living in it, and as you're living in it, paying off the mortgage, you're also building equity in your own property. So is there a benefit to owning a house and then selling? Absolutely, and a great percentage of global wealth has been passed on through generations of owning land. Plus, with other methods such as house hacking, which I'll get into more in depth in another video, you can actually live in your house, rent out a room or a suite, and have someone help you pay off the mortgage as you live in it and grow equity. And in Canada, if this house is your primary residence, you will get a tax break on capital gains when you do go to sell your house down the road. Number 2, renting out a property. What's the alternative to living in the house? It's renting out the house. So you don't get the benefit of actually living in the property, but you do have someone else being in it and paying off your mortgage over time. Plus, if you have positive cash flow from the rental, that's just going to benefit you even more. And as the person continues to pay off your house and they get you to the point where you actually own it outright, then you're just making steady profit on the rental income. Number 3, house flipping. House flipping is a much more aggressive way of investing in real estate, and it requires much more capital to renovate a property. But this is the epitome of finding a place to buy low and sell high. Popular house flipping targets are old rundown properties that are selling for way under market value or even foreclosures. The idea is to invest some money into renovating the property and then selling it at a much higher price. And the nice part is house flipping doesn't actually require a tenant to ever have to live in the property before you resell it. It can be an incredibly lucrative way of investing in real estate, but also probably the most capital intensive. Not to mention that the new house flipping taxes can make it hard to maximize on profits when it comes time to sell. Number 4, vacation properties. Another popular way for Canadians to invest in real estate is to buy a vacation property. This can be a cabin, a cottage, or even a condo in another country. Ideally, you would use a property when you're on vacation in that particular area, and when you're not there, you would rent it out and host it through a site like Airbnb or VRBO. And there are plenty of property management companies that will take care of the business end of things when you are out of the country. Not only are you collecting rent, but you're also saving on accommodations when you travel. Just make sure you understand all the property ownership and tax laws of the country you're looking to purchase in. Number 5, commercial real estate. There are a lot of investors who would rather deal with a business rather than a residential tenant. With tenants, you don't always know who you have living in the house. But with businesses, there's a certain standard of conduct that needs to be kept, especially if this is a retail storefront. One thing to note when buying a commercial building and renting it out to businesses is going to require a lot more capital up front. This will likely make it unattainable for most Canadian investors. And number 6, investing in REIT stocks or ETFs. Perhaps the easiest way to invest in real estate investment trusts trade on the major stock markets. Rather than buying actual property, you can invest in these REITs or ETFs. A REIT is a company that owns and manages properties across across Canada or even around the world. They collect the rent from tenants and pay a high percentage of their net income to shareholders as dividends. Because when you're registered as a REIT, you get large tax breaks, including paying zero corporate income tax. So now that you explored the 6 best ways to get involved in Canadian real estate investing, let's talk about how to get started. A common theme with real estate investing, especially in Canada, is a high upfront cost. If you think about buying a house, the standard down payment in Canada is 20% and probably even going to be a little bit higher if it's an investment property. According to the CREA, the average home price across Canada is $612,000 and a lot higher in major cities like Montreal, Toronto, Vancouver, and even here in the central Okanagan. So that means that the average Canadian investor is going to need a down payment of $120,000+ just to get started. And this doesn't even include the other fees like lawyer fees, realtor fees, and additional taxes like property transfer tax in select provinces. And on top of that, you need a good credit score, net worth, or decent employment to even get approved for a mortgage here in Canada. This is all to say that real estate investing does have significant financial barrier to entry. Unlike stock investing, real estate investing requires you to rely heavily on others like realtors and contractors. And this can be a benefit and also a disadvantage. On one hand, improving the property is all within your control. And with stocks, you're dependent on the performance of the company or the overall sentiment of the market. Investing in real estate can have the potential for massive gains, but it requires a substantial amount of initial capital before you even have to worry about collecting rent or renovations. Now, let's weigh the pros and cons of investing in real estate in Canada. So for the pros, you have potential for large profits both on the short-term and long-term horizon. Improvements in the value of the property are within your control. You can live in the house and benefit from owning your own shelter. Properties can be passed down through generations, creating real wealth. Real estate is typically a hedge against inflation. Now let's look at the cons. As stated earlier, initially it requires a substantial amount of capital to get started. There are a lot of fees for buying and selling a property. Real estate is not a liquid asset. Being a landlord can be a lot of work, and you have to continue to pay your mortgage even if you can't find tenants. Now let's quickly talk about real estate investing and taxes in Canada. When it comes to investing, it's always important to know about the taxes. There are, of course, the standard taxes that you pay no matter where you live. Things like property taxes, strata, utilities, garbage collection can all be charged throughout the year. Owning a property isn't cheap, and taxes can eat into your overall profits. For income taxes, as long as the property is your primary residence, you can save on capital gains when you go to sell the house. But if it's not your primary residence, you will be charged under the capital gains marginal tax rate. And this can definitely mitigate some of the incentives for frequent house flippers. Is investing in real estate a good investment in Canada? Historically, the Canadian real estate market has steadily grown in value. While many refer to it as a bubble, we have yet to see this bubble pop. If you don't have enough for a 20% down payment and you have no interest in being a landlord, there are plenty of other options. Investing in REIT stocks or ETFs is a low-stress way of having exposure to the real estate market. In a country where population growth is on the rise, Canadian real estate is an excellent long-term investment. But before you get invested, make sure you do your own research and understand the benefits and pitfalls of investing in real estate in Canada. Congratulations, you've made it to the end of the video and you've taken the proper steps in learning more about real estate investing and paving your way to your own financial freedom. If you or anybody you know is looking to start your real estate journey today, and especially you live in the central Okanagan, please reach out to me. I'd be more than happy to help you out, and I'm never too busy for your referrals. My goal, as always, is to simplify the real estate process so you don't have to worry about a thing. Also, if you enjoyed this video, make sure you subscribe to my channel and check out my other videos so you can learn more about the buying and selling process. Once again, my name is BrettBRealEstate. This is my channel, BrettBRealEstate, and I will catch you in the next video.